So we've had some questions this week, and every time we have questions, we're going to bring them to you
Yes.
for an explanation. So what is the difference between a pre-approval and a full approval when it comes to the borrower?
I've had some brilliant agent
Oh, is this the
say
yes.
something about a P.O.F.A.
Yes,
And
yes.
what was that? I think
it was.
it was a pre-offer full approval, and that was me. Yes.
Yes.
What's the difference between a pre-approval and a P.O.F.A.?
Yeah, that's right.
Let's talk about that. I should have changed my slides on P.O.F.A, but
Yeah.
I apologize.
It's gonna catch on, trust me.
Okay, so in clarification, a full approval that you're about to explain is what happens through the contract escrow process. P.O.F.A or a P.O.F.A, whoever's a P.O.F.A, it happens before they go into escrow, right? So that's really the only clarification on that. So
right. Yeah, let me talk about that. So the pre-approval is, when clients does a loan application, I look at I pull the credit, I review income and assets, and that's something that clients have to do before they start looking for property, right? So you're not gonna go look for a house, fall in love with it, and then do a pre-approval and you find out that you cannot buy, you cannot get a mortgage. So
right.
we always recommend doing the pre-approval first. I run it through desktop underwriting. It's a sophisticated system that just analyzes the full file, the whole, everything within 30 seconds and gives me approved or ineligible decision. And then I work with it to see how we can make it work. I give client different options on what kind of loans they could get, maybe conventional, maybe FHA or whatever. And that is a pre-approval. I give a pre-approval letter. That's what you would need when you put in an offer on the property. The P.O.F.A is something that
Can I throw this out there real quick before you go into the P.O.F.A? So the pre-approval, like you said, number one, it helps them establish their budget so they can afford what they're looking for. And number two, it has to be done before they find the house they want, because when they find that house in this market, they have to move quickly and have to have that letter to submit. So that leads me to the question of, if they come to you and they have all their documentation that they can provide you very quickly, how long does it typically take for them from first contact with you to get that pre-approval letter? How quickly are you able to turn that around?
I can do it within 24 hours.
Okay.
Or even a couple of hours. It depends on complexity of the file. Typically, within 24 hours, it's not a problem. And, sometimes even faster.
Okay.
And it is true. I do want to make the point that, buyers oftentimes, they don't really take us seriously when we tell them they need to get the pre-approval before looking. But it's a fact. When we submit offers, the seller's agents, they don't even look at offers that don't have a pre-approval.
Yeah.
Like it's not even, in our area, it's not even considered a
legit
complete offer until
Yeah.
you're able to provide that. So that's why we really encourage people on how important it is to get this pre-approval. So I do need to say that.
Exactly. Yeah. And, a lot of times clients, they qualify, they know that they qualify, but maybe they don't really understand what payment is gonna look like with that particular sales price category, right? So that's always good to do that pre-approval, because besides the letter, I also provide with the loan estimate so they can see what the payment is gonna look like, what cash to close they need to have on hand to to be able to get this mortgage. So it's very important to do it a pre-approval first and then start looking for houses, and not vice versa.
Right.
Gotcha. Okay.
Right.
Yeah. And the step further would be to get the full approval even before they find the house. That's P.O.F.A, right?
Yes, that's the full approval.
Yeah, so what's the difference? What are the extra steps that, number one, they have to go through to get from the pre-approval to the full approval pre-offer? And what additional steps do you have to go through?
Right. So with the full approval, I would have to collect more documents than just with the pre-approval. With pre-approval, I ask for pay stubs or, the tax returns if someone is self-employed, or, 2 months of bank statements. With the full approval, I might need to ask for additional documents, like maybe driver license, of course, and IDs or some other document that
Right.
could be, pertaining to their particular situation. So, and then we'll send them forms to sign, it, like disclosure forms saying that we want to proceed with the full approval. There's no obligation, there's no cost for that, but it just gives them that extra assurance and make them stronger buyers when it goes through the full approval. So I send the file in our process, operation center. The processor will pick up the file, maybe do some verifications of employments and things like that, and then send the file to underwriting. And the underwriter is a person who has higher level of authority to, basically look through the whole file, all details, and give a commitment to land. They say, we're giving you commitment letter. The commitment letter might have some conditions on that. It could be, we call it conditional approval, because you definitely need a property, right, before you can get a mortgage. So one of the conditions would be get under contract. Maybe we need to get appraisal done. Maybe they ask for some additional documentations, but that full approval on hand will make the buyer much stronger candidate and more appealing to a seller than someone who just has a pre-approval.
Yeah,
right?
That's exactly right, because in this market, you're still going against, all the buyers are going against other offers. So oftentimes this allows us to write an offer without a finance contingency.
Yeah.
And with Tatiana, for example, we're able to confirm with her, like, hey, this is a full approval, right? Can we waive the finance contingency? And if she's put it through processing, underwriting, and they've still given you guys that conditional commitment letter, then that's a yes.
Yep.
And that doesn't mean we don't require an appraisal contingency. Sure, we would keep that and whatever else you needed, but it's almost as good as a cash buyer or a cash offer, right? It's amazing. It's incredible.
And the closing can happen quicker. So you close deals for us in as low as 10 days with us being in place. So and for sellers, that's very enticing, because they want to know that they're going to be at risk of the contract falling through for shorter periods of time.
Right.
So there's a lot of benefits for that full approval.
Yeah, and the fact that the borrower doesn't really have to do much more to go that extra step. It's like the difference is just a few additional docs that are needed. It's really not that.
Yeah.
There's not a whole lot there, but I think that a lot of times buyers are worried that means they're locked into the loan. So Tatiana, can you just say again, for clarification's sake, you've already said it once, that it's no obligation.
Absolutely, there's no obligation. Nobody's gonna force you to buy a house if you cannot find the house you like. Nobody's gonna give you a mortgage if there's no house. So if you get fully approved, you decide that, well, actually, I'm not gonna buy anything right now, it's not a good time, we cancel the whole loan and that's it. There is no hit on the credit. Sometimes people think that it might hit their credit score because they didn't go through the buying process, even though they applied. So there's really nothing, no harm to them. But it's peace of mind that I'm approved. And now I went through all, the hard part, providing documents. And now when you find the house, you can just concentrate on packing, right? You don't have to worry about this approval process and running around getting documents while everything is already packed. And then I would start asking you for documents if we would do it other way around, right?
Yeah. That's a good point, because once they've gotten their contract accepted, they want to be focusing on coordinating their move, right? And packing, and if it's schools or utilities or whatever, all that, whatever's involved there, and not focus on all the paperwork that you guys need. If they've already gotten that handled, then they can focus on the other things, because you know, people don't get to take time off for buying a house. They still have to go to work and still have to do all the other stuff.
Yep.
So it's really good all the way around.
Yeah.
And I think
But we-
another important benefit of getting fully approved before finding a house in, you know, the interest rate environment like this, like I showed in previous slide, the rates are going up. We can lock the interest rate in when we're still looking for a house, but we have that full approval. We send the file for a full approval, because
Right.
typically
That's a good
rate
point.
gets locked only once someone is under contract. We can lock it TBD, to be determined property,
The lock and shop.
lock, shop, and hold.
Yeah. Yeah. And then for those people, let's say again, who are concerned that or think, but the rates are gonna go down, I'm gonna wait. Fine, refinance. Refinance when the rates go down,
That's
right?
right.
You don't want to wait and start shopping when everyone else is gonna dive in, and then your competition is so much higher and everybody's bidding the price up so much higher, and it's really gonna, I think you would eat it in the end there.
We heard that prediction at the meeting that we were at.
Oh, yeah.
Who's the mortgage guy that you had mentioned? That's I can't remember his name. Yeah.
Rankus or
He said he was a speaker, nationwide speaker, and you had talked about him, and you sent the video that he.
I forgot his Habib,
That's it, yes.
something like that.
So he spoke at EXPCon, our brokerage last week, and he gave an analogy, which I've heard this a couple times. He said for every 1% that the interest rates come down, that's going to equal 2 million buyers coming back into the market.
Mhm.
So everybody's waiting for the interest rates to come back down. Well, with low inventory, when those 2 million people come back to the market, what's that going to do to prices? And we have the evidence of what that does. It causes people to overpay at the purchase point. They're overpaying because they have to bid. So now is the time to lock in the price when it's reasonable, even at a higher interest rate, and then refinance if you can.
yeah.
Yeah.
Exactly.
If not, you're building regret upon regret upon
That's right.
regret, and that doesn't work for anybody.
That's right.
I did see that. I saw his PowerPoint presentation, and I did see that chart where he's showing what it's gonna cost you to wait, how much it costs you to wait. So let me, if you want, I can.
Oh, yeah.
Maybe I'll share that one.
I think while you're pulling that up, we need to add to our list a whole cost of waiting scenario.
Yeah. We kind of did that with that
Um,
one video that we did, but
Did we?
but we could dive into some more depth, especially with the
I
current.
just like those so much.
This one
Okay, yeah.
right
walk us
here
through
is
that.
showing wait for lower rates, and that's how much it's gonna cost you. I don't know if you can see well.
Yeah.
This is the one, right? Wait for 6 months. It's gonna cost you $5,000. Wait for a year, it's 33.
Wow.
42, 70, 80,000. Wait, when you're waiting for 2 years, when you're waiting for 3 years, it's 115 thousand. That's a cost for
Wow.
waiting. And another chart that he had was month over month change in real estate value. It shows right here that this is just this year, actually, from January to August,
Yeah,
and it's showing the
Wow.
appreciation percentage.
that's what we've been seeing that
Yeah.
across the board, between 5 and 8% on even condos, even low end condos. We're seeing escalating at that
Yeah.
5 to 8%.
What
Yeah.
area is this based on? Is this nationwide?
I think I'm not 100% sure which area, because that's his slides.
Yeah.
Yeah,
I remember one slide was for Utah, but we can easily pull the data. I think it's all throughout the country,
yeah.
and
that
our
makes sense.
area appreciates pretty well too. So
Yeah.
I don't think it's not accurate for us. And another one was that I really liked from him was showing the overall appreciation. People are afraid that investing in real estate is not a good idea. Look at this data from 1942 to 2022. So that's 80 years.
Wow.
In this period of time, the prices appreciated 73 times for 73 years out of 80. only 7 we had some drop. Of course, we can see here
Yeah.
2007, 2008, those are famous years.
Yeah.
But after
Well-
that, it started appreciating again. And one time, here is one is for just 1 year in 1955. It was just flat, nothing happened.
So
Yeah.
that's a key. So I've seen this graph over and over again in different forms, and it's key. So we had 5 years here with the real estate crash that prices dropped, and then we just had our in the 90s we had the small drop, and it was what 1% on the drop over in the 90s.
Yes.
So everybody who's kind of waiting on prices to come down, this is the year. These are how the years ended. So in a given month in those years, you might have seen prices come down because it might have been the fall, or it might have been, a seasonal thing, or maybe, something happened like something happened. But the year over year, there's only been 7 years in the last 73 where prices have come down. So people that are waiting for prices to drop, they're waiting for the big crash. They're thinking they're gambling and putting the numbers in their favor. Historically, you're taking a 10-to-1 risk that it's not a good bet. There's no historical evidence that the prices are going to come down significantly, and while they're waiting, prices are going up 5 to 6% each year. So even if it does make a drop, they wait 2 years. It's got to do a 10% drop just to get back to ground zero from when they started.
Yeah, but everybody gets stuck in that thinking like this time is the time. You know what I mean? And they apply that to so many things in life, in their lives, that it's like, but this is going to be another one of those times where it's
this time's
dropping.
different.
Yeah, and typically, buying the property, it's a long-term investment, unless you want to flip something and sell real fast, buy and sell real fast. But if you buying for as a long-term, you can tell that even if you buying now and then, the appreciation, the value drops after a couple of years, you're gonna catch up and actually make more money.
Yeah.
It's a savings account you live in.
That's right. It's time in the market, not on the market. Thank you for sharing those slides. I'm actually going to take that and put that and make that a separate video as well, just for more evidence, because people are making decisions based on something that is likely not going to happen, and it may end up being detrimental in the future. I think they need to understand, that the press isn't giving all of the whole story. So
I'll send you that PowerPoint presentation.
Okay, that'd be fantastic. All right. All right. Well, I hate to cut this short, but I've got to head out for an appointment. Did you have anything else, or do you have any other questions? Or
I have nothing, but I really love that top on you.
Oh, thank you. I love yours.
Thank you. What about my top?
Your top looks great too. I should have been in black.
Oh yes, well, yours of course.
You get the black limo. All right. Have a great week, and we'll see you next week.
All right. Thank you.
Bye.
Bye bye.